So UK Business Angels Association is a trade body for angel and early stage investing, representing over 18,000 investors around the UK. Jenny has a huge amount of experience, over 20 years of facilitating SMEs access to investment, both in the UK and internationally. So Jenny is going to have a conversation with Amanda. Amanda is an angel investor who recently actually won an award at the UK Business Angels Association Awards, which was about the best women-led investment. So really delighted to have you both here. Please welcome you up on stage. And this is all about investment matters.
I think we're sitting in the right seats. Yes, is that right? Don't go to sleep. This will be good. Okay, so you've got two glammy women, both involved in angel investing. We don't look like men, do we? So the first thing to tell you is that women are very, very important to women entrepreneurs as investors. And my big campaign is to encourage more women like Amanda to back wonderful women entrepreneurs like yourselves, because our research has shown that women like myself and like Amanda, we tend to want to back women entrepreneurs. We see the opportunities, we know how we can help, and so we naturally have them as part of our portfolio. But we also know that it's very difficult for you to find women like ourselves because there's not enough of us. And Jordan touched on this as well. And our research has shown there's not half enough women in this country who, many women, have lots of experience and quite a bit of spare financial capacity and are still not recognizing the opportunity to invest. And they're not meeting enough wonderful women like yourselves who can offer those opportunities for them to invest. So this is the first thing for you to bear in mind. So there aren't enough of us to find. The second thing is, when you do find us, we're very, very interested in backing you. So that's a very good start. The most important thing, though, is to understand what investors are looking for. It's really important to understand how to approach us, how to attract us. We see an awful lot of deals. So one of the things we're going to talk about in this is really what does an investor like Amanda look for, and what tips she can give you along the way to really help you, hone your business proposition and maximize your opportunities. But first of all, you need to know about our investors. So Amanda, I'm going to ask you to say a little bit about your background, what you've been doing, the kind of experience you bring, and then how did you get into angel investing?
So I'm Amanda, and I started angel investing over 5 years ago. My background is that I've spent 20 years in marketing and in sales, so that's my area of expertise, and I've worked in big brands and small brands and startups that have gone bust. So I've done a little bit of everything. I've worked for British Airways, for American Express, for Fat Face, for all sorts of mostly consumer brands. So that's what I bring, and I think there's a difference between the generics that all investors will look for, and then each angel investor will have their own areas that they'll focus on, so I can dive through some of those. And I started angel investing. I first started investing through Kickstarter, so I've always been interested in new ideas and supporting small businesses. So I started through Kickstarter with some weird and wonderful products and friends who had creative projects. And then when crowdfunding platforms came to the market about 5 years ago, I dabbled there a bit. So I invested in a few of those through Crowdcube and others. And then I started to get serious and I thought, well, actually, how do I directly invest in businesses? Because I wanted to advise the founders directly rather than just through a kind of crowdfunding way. And that's how I met Angel Syndicates. So these are angel networks. And for angels like me, some of them run training. So they teach us about the tax benefits called SEIS and EIS. They teach us about something called due diligence and how to do that. They teach us how to evaluate companies, about valuations. So I used one called Angel's Den, and they have free programs for angels to kind of bring them into the market so that they feel confident investing. directly. And so I invested with them, and I also invested through Startup Funding Club, and they are another angel network. So they run pitching events, so I get to meet a lot of founders very quickly through speed pitching events or through pitching like this to a group and then answering Q&A. So they give me deal flow, which is super important because you have to recognize that angel investors will only invest in 1% to 3% of the companies that come across their path. And that's the same for venture capital, so VCs as well. So you have to do something to stand out,
Yes.
but we see a lot of volume.
So, again, the beauty of syndicates is that they have a name, because the hardest thing for you is to find Amanda. You won't find Amanda in the telephone book, you won't find her online. She doesn't put her head above the parapet, okay? Because as individual investors, it's extremely hard, for us to do that. I mean, we would be either inundated or, trolled or whatever happens online. So the most important thing for you to bear in mind to find angel investors is to look for angel groups, and Jordan's already mentioned North Invest here. We've also got GC Angels here in Manchester if you're in this area, but also finding angel groups. And on UKBA, on our website, you look on our directory and we have 72 angel groups, 2 of whom Amanda's mentioned. One is Angel's Den, and the other one is Startup Funding Club. You'll find North Invest, you'll find GC Angels. So you need to look out for syndicates because angels invest collectively. That's the very important thing. So Amanda, the other thing you touched on was about the kind of experience you bring, because I think the most important thing as you moved away from just investing online, it was the opportunity for you to not just put that money into an entrepreneur, but to bring that added value. So can you tell us a little bit about, why would you take angel money rather than crowdfunding money?
So when you're dealing with angels, a lot of them bring areas of expertise, and a lot of them want to be very active in the investment. So you need to figure out when you go to angels, what level of input you'd want from them. So some will give just funding and take a back seat, and others will potentially take directorships. So as part of my investments, I'm on the board of one of my companies, so I go to board meetings, but on others, I don't. So a key consideration for an angel and for you is who's the lead investor, because the lead investor is normally responsible for the due diligence, and then the other angels will follow. And I'm not the lead investor in my investments, so you need to find who that's going to be first generally, because they'll set your valuation, and then there's the other angels or the syndicates will probably flow around. Some of the syndicates do the due diligence and are the lead investor, and some of them don't. So there's different models even in what the syndicates and the services that they offer. Some of them are just networking, and some of them have funds now. So Startup Funding Club has a fund. So it has a 5 million fund, and it invests in companies, and it co-invests with its angel network, and they run pitching. And some of them are just networks. So Angel's Den is just the network. They don't invest their own money. So those are some of the things to consider.
And I think that is something to bear in mind, that often when you approach an angel group, there's often a sidecar fund as well that can co-invest, and that's often a way of mobilising additional money. And Jordan, of course, mentioned the whole opportunity about grant money alongside angel money. So I'm going to move on to that, Amanda, because obviously one of the interesting things is that many of these businesses may ultimately be looking at Innovate UK grants. And I know that you recently invested, and indeed we talked about Amanda as the award winner, because the company that you invested in was a female-founded business, and they'd accessed an Innovate UK grant. And what attracted you towards them, and why was the presence of an Innovate UK grant interesting to you as an investor?
So when I first invested, they didn't have that actually. So they originally they were.
Shall we tell a little bit about them?
Yes. So the company is called Big Couch, and they are in. They started one business, which is one I invested in along with Startup Funding Club, which is crew funding. So this is a model where the people who work on a film, they take a less of a day rate, but they get profit share later down the line, which helps independent films get produced because it lowers their upfront costs. So that's a model, but it had been used by big films, but nothing had been standardized. There wasn't a product on the market. So they started with that in the UK, and I invested in that. And then, you know, this is a story of investing I invested in two females. You know, one was a film producer, she knew the market very well, and one was the commercial. And so they came as this duo. And then over 18 months, they decided, or they started working, you know, in this industry, and they recognized a bigger market, a bigger opportunity. And that was in film financing and following the money, because it was very antiquated, there's a duopoly. So then they pivoted, but they pivoted into a blockchain application. Now, blockchain developers are few and far between, and they're very expensive. So this is when they went to Innovate UK, and they managed to, you know, it's £250,000 worth of grant money, and they work with the university. So this is a way, you know, and for me, you know, it just shows that I picked the right ladies, because now they've opened up a much bigger opportunity. And, you know, but, you know, obviously, if I'm looking at companies, you know, having a grant already in place, you know, massively reduces my risk, because somebody else has validated. You come with money that's non-equity money, so you're not diluting me. So it's a big kind of tick. In fact, anybody who is, you know, recommending you that their area of expertise is, you know, validating ideas, that's, you know, a trusted party, you know, decreases the risk for angel investors. And in that instance, I have no background in film. So I took a risk because I wasn't an expert in that area. But I mean, in other of my investments, I am more of an expert. So it's interesting, especially if grants or other people are doing the due diligence and who are experts in that field, I'm listening to them as an angel and saying, is this a viable business? And even, I think I was talking to Innovate UK, they have sector experts who validate your grant. It's not them. They're not the expert in blockchain or whatever it is. They'll go and ask 5 experts whether they think your idea is sound and has a business. So
that's tremendously attractive to you to know that's been validated in that way. So that's kind of one way of attracting you. What else do you look for as an angel when you're looking? Shall I back this business rather than that business?
So I think there's 2 separate criteria. There's the generic criteria that all angel investors will look for, and these are, which I think is helpful to, you know, they're looking at, is this your full-time job? You know, what is your motivation? They don't want to back a lifestyle business. You know, you need to show your motivation that you're going to be a high-growth business. They're looking at traction in the last 12 months in particular. How far have you gone under your own steam? You know, with friends and family.
And can I just stop you there? Because I think those are 2 important things. One is Amanda's saying how far you're conveying the essence of yourself to Amanda. And the second thing is also making it clear what you've achieved.
Absolutely.
Because, as you know, one of the biggest things you have to remember as women is that the men will bullshit all over the place about this. So you've got to really, really make it clear what you've achieved. And that's one of the big areas that I think is so important for you to bear in mind. And conveying the essence of yourself. Yeah. You know, what is it that makes you special, and what you are doing to really commit yourselves to this business. Yeah. That's really, really big.
Absolutely, confidence. I mean, I've watched a lot of pitches, and there is a tendency for males to be like uber confident, and you know, the nice hockey stick effect. And when you start like asking like, well, that's great, you know, in year 3, what exactly are you doing to, you know, quadruple your sales? And, you know, they get a bit like dicey on the details. Whereas the typical female response is like not quite the hockey stick, a bit more humdrum. And, you know, and when you really get down to details, they know them. You know, this is the difference in the sexes when they come to pitching. And I've seen a lot of pitches, so that is a truism of the space. So what else? I'm looking at, you know, payback. How quickly are you saying that I get my money back? are you an expert? So there's a term called your unfair advantage. So if you're already in that industry or already know something about it, and the perfect kind of thing is like you've gone, there's a real need here. And then they go, why? Because I've experienced this. It gives you huge credibility, a realistic valuation. So this, I've seen very, very good companies and ideas that have never got funding because they were unrealistic about their valuation. And that's why it's good to go to syndicates and to people, because they have, so many valuations, they'll understand, how to give you how to advise you on a sensible valuation. And remember that valuations and payback is different by industry. So if you're high tech, you're going to have a higher valuation than if you're going to be producing FMCG. Probably B2B tends to be slightly higher than B2C. So there's these, you're not all being evaluated equally in terms of criteria of angels.
And when you're doing that, are you tending to look around at sort of comparables in the market, what else has been going on in the market,
Yes.
to give you that? I mean, this is something to think about with your valuation.
Multiples.
What is it that Amanda looks at to find those baselines?
So yes, I look at the industry data, and for me, there's lots of valuations, lots of information in the marketplace that I can just look and go, okay, what's the valuation of tech or biotech? And this is the valuation, this is the type of investment, and this is how long it takes to kind of get my money back. So that's where I look
so you would expect them to have done some of that research
absolutely.
When approaching and saying, this is why I think my business is worth
Yes.
X,
Yeah.
because I looked at the market, I've looked at what's happening in the market, what other investments are being made in companies like mine, what companies like that are exiting for.
Absolutely. Yeah. So all the evidence-based, because I invest in early stage companies, so I invest through SEIS, so I get tax breaks for doing that, but often they have a minimal viable product. You're not yet revenue generating. You're certainly not profit generating.
Does that worry you, by the way, not yet being revenue generating?
No. So why take funding? One of there's two presenters today, they came from two extremes. One was, I think both called Samantha, but one was like, no, I didn't need the investment to start. I can just be revenue generating. The other one was like, I needed the investment to have a business. And so, the second, you have to sell the idea. You don't yet have the business. You don't have the funds to, anything in deep tech, you won't be able to do it. You need the capital investment in order to get the product built. So then you're selling, then what are my criteria going to be different? Because, I know the investment is $250,000 or whatever it is to get the thing off the ground. So then I'm looking at your expertise. I'm looking at who else that I trust has told me that this is a good, a good idea and is a viable, business idea.
And how far, you invest in two women, how far are you investing in teams? How is one person enough? Is it teams? What's your main sort of approach to that as an investor?
So one has been two, the other one is one. One person can't be good at everything. So if it's one, they have to recognize that they have strengths and weaknesses and be able to, prop up the areas of weakness and know that they need to hire potential, people who are good at marketing or whatever, finance, whatever that may be. I know that some venture capital firms will not invest anything that's more than three people because it's too high risk. And that's three people who are complementary, that don't have the same expertise, that have very distinct roles, because what if one of them wants to walk out, then where's my investment gone? So it's less of an issue for me, but I know as you get into more serious money that there's probably a law of three. Or definitely two.
Yes, and then you would want to build that into your investment proposition if you don't have that team already.
Yes.
What about scale? How far is scale important? Capacity to scale. How far is that important to you?
Because I'm investing early stage, I need to see that there's a market and that there can be a product that can earn revenue in some kind of time frame that isn't like 3-5 years. The ability to scale, there's often another round of funding. So where I'm normally investing is at the kind of product, the validation stage, building the team, first few customers, but often there's a view that within 18 months to 2 years, there'll be another round of investment, which is a scaling round. So they are different. So, great if you've got it to that stage and all you need to do is scale.
Yes.
But, recognize that there are people who invest that do they're more about the product and the market fit and getting, yourself ready for that. But that's normally SEIS, and then EIS investment can often be used for kind of scaling in the next round.
And what about competition? How far do people really need to understand their competition? Is that important to you to know how they stand against the competition?
Absolutely. So every investor will ask you, what's your solution? And how is it better than the competition?
And so standing out in some way, how they can kind of keep ahead.
Absolutely. So that uniqueness could be branding. It doesn't have to be just IP.
Yes.
It could be tech. It can be a range of things. What is that makes me different? If you're very easy to copy, that's more of a challenge.
But patterns and things like that are not necessarily the key.
No, not necessarily. I'm looking at investment in biotech, and there it's more important that they do that. But in consumer, some of the consumer, it's more about the brand building, and actually the IP is very, very expensive, so they do it slightly later.
And because we're kind of nearing the end a bit, as Sharon has just given me a little hint, I thought, if just you've listened today, you've been here, Amanda's been here all day listening to you and hearing the different comments and things from the floor, what kind of tips would you feel as an investor you'd like to kind of give to the audience, things you think they should have some takeaways today?
I think, are you ready for funding is probably the first question. Do you need funding? Is it a model that you want to go down? What do you want from those investors? Where are you, potentially what areas filling your weaknesses gaps, or just a mentor from your sector? And then, I'd consider other, I've dealt with companies where they've gone through crowdfunding plus angel, because the crowdfunding has given them, PR and awareness.
Yes.
And the angels have given them the support network, and the kind of the board presence and the support and the advice. So there's not one size fits all. It's, I think, understanding what you really want and what you think you need in the next kind of, remember that I'm investing probably for 7 years. So I don't expect angel investors don't expect a quick turnaround. So, we're in it for the long haul. We'd rather have a viable, takes us slightly longer than it goes bust kind of model. But, when I go on board with a company, I'm there, in the background, being part of board meetings, having, being updated, asking and supporting, introducing people, whatever, I'm kind of is required of me. So think very carefully about, kind of what you want.
And it's a long-term relationship, as Amanda said. It can be 7 or 8 years, and that's if you're lucky, isn't it, Amanda? So one of the things is that you have to like each other. You have to feel you can get on.
Absolutely. So there's, talk about the generic of angel investments, and then for me, I didn't set out to invest only in primarily in female co-founders, but that's what happened, because when I asked those probing questions, I got honest answers rather than some, fluff. And, I'm looking at things, are they self-aware, where they know where their strengths and weaknesses is? And the traits really are, sheer grit, because there will be really tough times, and I'm looking at, have they been through that? Do I think that they will get through that? And also, adaptability, because you will need to adapt your business. I've not seen one business where they go in and then 3 years later they're doing the same thing. just doesn't happen. Like you'll get, as you go to market, you'll get feedback, and then you'll adapt your product or who your target audience is, or get funding and then go through a growth spurt. So you're in it for the journey, and you have to like each other and want to, have those conversations. But it's for the angels, it's I'm learning new industries. I didn't know anything about blockchain before I invested in it, and that's exciting for me. So I get a lot out of it. Angels do get a lot out of it, and they give as much time as they can.
Well, thank you so much, Amanda. I'm sure that you probably learned quite a bit today. I certainly think that having these kind of conversations is really, really important for women like yourselves, because you can't read all this in a book. Amanda hasn't written her book yet. But I think most importantly, just getting those insights is so important. Then you now know how to approach an angel, because you know what they look for, and they're all different. So they're obviously getting to know each other as part of that. But it's one thing also to bear in mind that this is not frightening. You should definitely look at angel investing as part of your journey, and inform yourselves as much as anything. But I think the most important thing is, I know some of you may have perhaps knocked at the door of a bank or tried for things and people have said no to you. The most important thing about angel investing is there's lots of us around, and you have to find the right ones for you. And so you have to kiss a lot of frogs, as we say. And so it's, so really kind of you learn each time you meet different angels. So I hope that's really been useful to you today. I'm sure that there'll be lots more opportunity to feed in more information through our work with Innovate UK. And obviously you heard today about Raya and some of the ways you can also engage with both Innovate UK grants and the angel community here in the North. So I'd like to thank Amanda so much for giving your time today. You were fantastic. Thank you so much. And thank you all for listening. Hope to see you soon.